Let's get into these 5 questions. Number 1, the first question that you should be able to answer before you take a trade is how far is your stop loss? You should always understand that before you go into a trade, your risk has to be predefined. I think that you can't consider any type of investment, any type of trade without first understanding what is your risk going into this idea, going into the thesis here. The second question is, what is your first potential profit target in this trade? Now, what I like to do in my trading is I use R multiples, which really simply means that if I'm risking 5, 1 R would be 5. 2R would be 10 pips or 10 points in profit. 3R with a 5 pip stop would be 15 pips in profit. So the first 2 questions, you should understand your risk, your stop loss, the distance there, and then you should also understand what are your potential reward targets. You should have multiple targets, in my opinion, for most trades, because I think that's what gives you the potential risk reward setups that will tell you, yes, take this trade, or no, don't take this trade. The third question that I think you have to be able to answer is, what grade is this setup? Now, I use the word grade like we're in grade school. Did you get an A on your test or a B on your test? I grade my trades A, B, or C depending on the quality of the setup. Each trade that I look to take fits a list of parameters that we detail in our courses. It's in a checklist that go into the system that we're trading, whether it's the A1, the D1, or the D2. Those are 3 entry and exit systems where my risk is predefined, my stop loss is predefined, all of that is built in. All these questions are answered in my systems. So the grade, this part of it, is A, if it's perfect, if there's nothing that could be better. B, if there's maybe 1 or 2 things that could be better. Or C setups to me are trades where 2 or 3 things, maybe more than that, are wrong with it. Even if I can still read risk reward, because there's so many things wrong with it, it's a lower grade, a lower probability, and therefore something that I want to normally avoid. Question number 4. How much % loss does your system allow for on this entry signal that you're taking? This system is, like I mentioned before, for me, the A1, the D1, and the D2. That's the only 3 systems that I trade. I teach those in our courses. That's what other ASFX members are using to make money. That's where we find our sauce, right? That system predefines, based on the grade of the setup, how much am I going to be willing to lose on this B setup or this A setup. It depends on the currency pair and the quality of the trade. But that percentage loss ties directly back into step number 1, question number 1, which is how far is your stop loss. So again, you can see how these questions really do layer on top of each other to give you a full picture for risk management going into the trade. The last question, this is a really important one, kind of different than risk management, but still managing your trade, is what would be a reason to get out of the trade early, and like a slash, what would be a reason to get out of the trade completely? So let's say the trade is working in your favor, goes up 1R, and then turns around and starts to come down. You should have built into your system early exit signs. For me, I look at breaks of just simple EMAs. If we break through the 8 EMA, that's a first sign for me that we might be breaking trend. If we break down through the 21, that's a really strong sign that the short-term trend is dead. And that's when I want to look to get out of some of my trades. That's not my only exit signal. Don't take it that it's that simple for what we do, but that's the idea, is that in my plan, it's pre-written. I study this every day. I read it before I trade every day. It tells me if you're in a trade and it goes up 1R and you don't move your stop loss yet for whatever reason, but it does break the 21, get out early. Take the profit, take the break even, get out. And at the same time, if you're up in the trade, it's up 6, 7R, it's at 80R max, it's overbought, those are reasons that you can have in your plan to say, hey, you're done. Full out of the trade, move on to the next idea. So I think it's really important to have a reason to get out early and a reason to just take the full trade off the table. So having these little outs, whether it's working for you or against you, is really important because the market's always changing. It's very fluid. So you have to be willing to be fluid with it. You can't be locked into your idea black and white. If the market changes, if it moves up very quickly, you might want to lock that stop so you don't give that back and it turns into a popcorn trade. You don't want that. So as the market moves, make sure your plan has parameters or rules written into it that you can move with the market. So let's just recap these 5 questions. Number 1, you should know how far your stop loss is. Number 2, you should know your potential profit targets. Risk reward is now defined. Number 3, you should be able to grade this setup. What is that risk reward setup? Is it an A1 entry? Is it a B D1 entry? A B quality D1 entry? So you see how we have this whole language for it? It's a quality of a grade behind a specific entry signal. That specific entry signal has the predetermined stop, has the predetermined take profit levels, right? Number 4, how much percent loss does your system allow for you to lose on this one trade? That goes back into that third question. What is the grade of it? That should tell you the percentage that you can risk on this setup. And then number 5, what are the reasons to get out early? Whether it's working for you or against you, be ready, be watching, and be ready to get out early if it's just not working. And at the same time, be ready to take the full profit off the table if it does reach your desired target.